Hey everybody, this is Ryan Mallory, and we're going to talk about IPOs here. Should I be buying the Doordash IPO, symbol DASH? Should I be buying the Airbnb IPO, symbol ABNB? We're going to get into all that and more. We're going to talk about IPOs in general and why you don't want to be a sucker just because you know about these stocks, you've used them, they're familiar to you. Don't let that be the reason for why you're buying into these stocks. Let's dig into all of this and more right now. So the simple answer to whether or not I should be buying the Airbnb IPO or the Doordash IPO is neither. Not right now. Hold. Wait. Just give it some time. I mean, let's ask ourselves, why are we so anxious to buy the shares of Airbnb and Doordash from the very people who got to buy it at the IPO price and excluded you from being able to do the same? Yet now that they want to offload their shares to you, these venture capitalists and these bankers, we're just lining up to go buy them. No, let that junk fall. Let it fall. Don't go buying into it. It's crazy. If you look at the history of IPOs, they don't do good for about the first 3 to 6 months. There's some exceptions in between, but there's very, very few of them. Your best odds is to wait 3 to 6 months to let these things come in a little bit, let them sell off. It amazes me every time how so many people just dive right into that IPO price. As soon as that thing comes out, people are buying it. And they don't even know why, except that I've heard of Airbnb or I've heard of DoorDash and it's gonna go higher. And then they justify it by saying, well, if it goes lower, I'm willing to hold it for the long term. What kind of stupid answer is that? Wait for it to go lower and then you buy it. And I'm getting a lot of questions right now. What do you think of Airbnb and what do you think of DoorDash? To be honest, I'm a technical trader. What am I gonna base it off of? I have no idea. I like Airbnb. I've used it to book rentals before. I like DoorDash. I've had them bring me some food. But in terms of technical analysis, there's nothing to guide us right now. This here is the chart of Airbnb right now. Is that a chart that really gives you much clues into what it wants to do? No. We have 2 days of trading so far in the stock. It doesn't give us any clues about what it's going to do going forward. But yet there's people who think, hey, I want to buy this at 165, and they're getting crushed right now as they're down almost 20% on the trade. And by the way, if you bought it at 165, I'd like to shake your hand because right now you are the biggest bag holder in the history of the stock. Now, granted, it's only been trading for 2 days, but you're still the biggest bag holder in the history of the stock. How about DoorDash? Only been trading for 3 days, yet it's down. Why is that? It's because all of these venture capitalists that have invested in these companies, all these bankers that have helped to push this IPO out and bought at the IPO price. Once it starts trading, take a look at Airbnb, for instance. The IPO price was $68. It's traded as high as $165. What do you think they're gonna do? They're gonna offload it. They've just made 150% on their trade. They don't want to stay in that any longer. They're depending on people like you and me and retail investors as a whole to step up to the plate, get in line, and to buy their DoorDash shares and to buy their Airbnb shares like we're waiting in line for the latest iPhone to drop. To get any sense of what the stock's doing, you have to drill all the way down to the 1 minute chart, and I'll tell you right off the bat, the 1 minute chart's pretty much useless. It's almost useless for day traders in most cases because it's just so much noise. And you look at the DoorDash 1 minute chart, what does it show you? It just shows you a bunch of back and forth trading here. It's going down, but it's just an absolute noisy mess. Yes, there's swings to be made, but it's so quick and so fast that if you're not anticipating it well before it happens, there's no money to be made. At least on the Airbnb IPO, one thing's for sure is that it's got a downtrend well in place. You got lower highs and lower lows. So at least you got that going for you. But again, it's still a 1 minute chart. You don't have much insight into what this thing wants to ultimately do. Now, if you don't think that I'm right about these stocks, that's fine. That's your prerogative and everything. But don't discount what I'm saying because all you have to do is look at recent history. Some of the biggest IPOs out there have struggled out of the gate. Take a look at Snowflake. One of the most popular IPOs this year. What did it do after initially trading? It did nothing for about 2 solid months. But now over the past month, it has showed some giddy up, but that's not likely to hold either. If you want to look at a success story so far, maybe look at PLTR. This stock was kind of flat for the first month of trading and then it really took off. It's gone up about 170%. On the whole, that's pretty good. You have a triangle pattern trying to form here, but there's a good chance this thing's gonna break back down. The market's starting to see some incredible valuations that we've never seen outside of major market bubbles. So if the market crashes, what do you think's gonna crash first? It's gonna be your IPOs that came in at these ridiculous valuations. Your Snowflake, it's gonna be your DoorDash, your Airbnb. They're all gonna get killed, and if that happens, it's going to give you a much better price at a future date to get in at. So much about the market is about patience. There's so much hype, and it's that hype and it's that enthusiasm and it's that energy that gets us really, really in trouble when it comes to trading. We don't want to be patient. We want those shares of Airbnb and we want those shares of Doordash, but you have to wait. I love to bring up Facebook as an IPO because back in 2012, it came out, it opened up at $48. It dropped almost 60% in the months that followed, all the way from $42 to $18 a share, before making its historic run to $273 as of yesterday's close. But it literally took over a year before the wheels finally started moving on that trade. And once it did, it was a great opportunity to get in. Buying these IPO stocks is not a bad thing. It's the timing of when we buy them is a bad thing. Timing is everything. You can't justify your emotions for wanting to buy a stock by saying, I'm willing to hold it for the long term, because that's a stupid idea. You never heard Warren Buffett say, I'm just gonna buy it here because I believe in it long term. No, he will buy it when it becomes the right price, and that's what you have to do for yourself. And if you don't know what the right price is, don't buy it. For me, I like both of these companies. I'm a little bit more skeptical of Doordash, but I do like Airbnb, but I'm not buying it here. I'm gonna wait for it to come back down some. I'm gonna wait for it to really settle in and give me a price that I'm comfortable with. And as traders and investors alike, we have to be willing to be patient till we get a price that we're comfortable with and we're not chasing. We don't have that fear of missing out. Hey, and before I forget, I wanna tell you about my YouTube membership channel. It's a really cool feature on this channel here. You can click on it by hitting join below. It's gonna give you access to all of my analysis on the S&P 500, the NASDAQ, the Russell 2000, multiple times each week. You're also gonna get my updates on all the FANG stocks like Facebook, Apple, Amazon, Netflix, Google, and for kicks and giggles, I'm going to throw in Microsoft and Tesla each week. Even on top of that, you're going to get my personal watch lists that I trade off of each and every day. I'm going to tell you the daily setups that I'm following, and I'm going to give you the most intriguing charts that I find worth watching. So make sure you click that join button below and check it out for yourself. Guys, take a look at another IPO here that came out back in August. This is Rocket Companies. What did it do? It shot all the way up to $34. Now it's trading at $20. What do you think those people at $30 are thinking right now? They're down 33% on their trade. Again, they're a bag holder right now. They're hoping that it comes back up, and they really don't have any technical analysis that they can base it on because there's nothing there to judge by. Guys, take a look at Sonos. This was another hyped up IPO. It opened up at 16, took a 50% haircut, going from 16 down below 8 before finally rocketing back up. The opportunity cost was incredible in this if you bought in on that first day and have been holding ever since, because that capital has been tied up, not making you any money since then, when it could have been in other trades and better trade setups making you the money. Or if you had just waited for this stock to bottom out just to show you some willingness that it's trying to base and break out, then you could have more than doubled your money. Here's the thing, you don't want to get caught up in what's familiar. That's what a lot of people did back in the late 90s. The IPO market was hot. It was super hot, and people were buying in at unbelievable numbers. In fact, once the dot-com bubble peaked in early 2000, the banks, the venture capitalists, they were dumping their shares. They were getting out. They got out at the top. Guess who doubled down and actually doubled the money that they put into the stock market in 2000 from the year before? The retail investors. The average Joe went and dumped $260 billion into the stock market in 2000 when it had already topped. Was the bankers doing that? No, they were getting out. But all the retail Joes out there, they were funneling that money right back into the stock market, and that's why they lost the money. Now, since then, what do people want to say? The market's rigged. The market's against the little guy. No, it's not. You're bailing out the banks. As retail investors, when the market peaks, because of our ignorance and because we're not putting the time and effort into the stock market that is necessary to make good and reasonable decisions, we're the ones that are bailing out these big funds. We're the ones that are bailing out the hedge funds. We're the ones that are bailing out the banks by letting them offload their shares on us. The Priceline IPO in the late 90s went from $16 a share all the way up to $88 a share. Once that market bubble peaked, that thing dropped 94%. It basically represented one of the biggest transfers of shares from Wall Street to dumb money that's ever existed. And what you want to make sure is as this market keeps climbing higher and higher and higher, and for a lot of reasons it's unexplainable, we want to make sure that we're not just buying into these IPOs because we find them sexy and because we find them cool and we want to be able to say we got a piece of the action. No, we want to make sure that we're being patient, that we're waiting for these stocks to come down like they almost always do and give us a reasonable chance to get long at a very fair and reasonable price. If you like this video, I encourage you to like and subscribe to it. By doing both of these things, it helps me to grow this channel. I put a lot of time and effort really trying to grow this channel to provide you with the best analysis on YouTube. and I want to be able to continue doing that, so make sure to subscribe and to like. Tell me down in the comments below, have you bought Airbnb or have you bought the DoorDash IPOs yet? What is your plans with them? I want to hear about it. I want to engage with you guys. I think this year alone, I've answered over 2,000 comments on my channel, and I plan on doing a lot more in the year ahead, so keep putting your comments down below, and I'm going to try to answer every one of them. Thank you guys, and God bless. Suck on that, Kramer.